So first of all, an iron condor is a short call spread and a short put spread taken at the same time.
Hmm.
And so it's called a delta neutral event because what it anticipates is that an instrument will stay in a range. And so the reason that I like using the iron condor right now is because we're seeing so many charts go up into resistance and fall back down into support and try to get up into resistance again. And so what I look for is a chart that has that pattern. Oh, it moves up and then it moves down. And then it moves up and then it moves down. So it might move in a cycle of going up and down. It might be grinding to the upside, but I'm putting enough time and space inside of the iron condor to trap most of the noise inside. So I'm
Hmm.
not going to be overly worried if the chart starts doing this, because at the end of the day, my ranges are out here. And one of the things that I really like to do to use that is to take a look at the ATR, the average true range, on a weekly event. And
Hmm.
then I go to the option chains and I see what the market makers have priced into the move.
Hmm.
And so if I look at something that's far away, let's say it's expiring in January, I look at those options and I'll see what the market makers are priced in at the straddle. And so that means I look at the call side and the put side to buy both of those options and I add
At the
them
money,
together.
right?
Yes, at the
Yeah.
money.
Hmm.
And I add them together and it tells me what the market makers are doing in terms of motion. Now, why would I do that? Well, if you think about it, market makers make money making a market. And so their goal is to price those options well enough for traders to engage, but at the end of the day, they win no matter what.
Hmm.
And so that's really how they're looking at it. So I'll use the combination of what I'm seeing there and the ATR, and then I'll say, all right, I'm going to widen that by a little bit more, just in case, and I'm going to build something like that. But just about every chart we are looking at right now is having these, it's grinding up for sure, many of them, but they're landlocked in terms of some big motion. And so what I look at is, okay, if the high is here and the market makers are saying there's another $20 move to the upside, I'm going to go out $30 and I'm going to sell the strike.
Hmm. Yeah. And and to be clear, the short strikes are kind of your range, right? That's where you get your maximum profit.
Yes,
And so,
exactly.
by choosing 10 higher or 10 lower, you're kind of expanding that range in which that trade becomes profitable for you.
Exactly.
Right.
Exactly. Exactly.
So, another thing we were talking about, and it's interesting that you bring in the market makers and kind of their motivations, right? I mean, at the end of the day, everyone's motivation is to make money, but the way in which they
Yes.
do it can be very different. A lot of us, we typically think on the long side only, and we're just thinking of, okay, I buy something and I want it to go up. I want it to go up as much as possible, and I want to ride it for as long as possible to capture as much of that gain. But the motivations are sometimes very different. We talked
Exactly.
about sometimes these market makers, they might be taking, they might have to put a trade on in order to make a market, and then they're going to put another trade on to kind of counteract that because they don't want their neck sticking out.
That's
So,
exactly right. That's
so
exactly
maybe you
right.
could
There's a
talk a little
really,
bit about that.
okay, there's a great example in today's price action for the Qs. So if you pull up the Qs, I'll tell you something about how the option chains were looking today.
Okay.
And so there's a concept that folks that follow option positioning, whether it's zero DTEs or 0 days to expiration types of options, or monthly options or weekly options. Everybody looks at how folks are positioning. And so in an options market, if I go to an options dealer and I say, hey, listen, I want to buy all of these calls, he will have to sell them to me. So if he sells me the calls, he is short calls while I am long calls. So let's say the market starts to rise, and today there was a wall that was sitting at somewhere around 507, I think was the number, 507. And so the price action started to run, no, it wasn't 507, it's 514. And so the price action started to run. Now, let's say I'm long all these calls. I am super excited. But the dealer is short the calls. So if price starts rising, he can't come back and take the calls that I bought because they're mine. And I have the right? He has the obligation. So because he has the obligation, guess what he has to do? He has to go to the queues and he has to buy them, because all of a sudden he's got negative delta. He makes money if the market goes down. I make money if the market goes up. The market starts going up. He's got a book of business that he's got to level out. And so it forces him into the market to buy it up. And this area that you can see, it's called a call wall, and it tells you where all of the trading is primarily positioned for big price action. A breach of a call wall forces the dealers to buy the market so their delta becomes neutral. So they're not losing money as the stock goes up. They're not making money either when it goes up if they buy it, but at least they're not underwater with all these short positions that they hold. So that's a very big key thing to watch when we're staring down options and charts that can run very aggressively. Knowing where a call wall is very important. And the easy way to do that is going to your option chains and looking at the ones that expire over the next day, your 0 DTEs, and just see where the biggest strike is.
You know what? How about if I let you share your screen? How about if I let you share your screen and let you show us exactly how to do this? I use Thinkorswim a lot myself, and I know that you are at expert level on Thinkorswim. So if you want to share
after only 27 years.
Right.
Yeah, I haven't used it in a long time. All right, so let's go to the queues. And let's look at the Analyze tab. And, oh, these options are gone, but let's see if we have the numbers attached to them anymore. Okay, so you'll notice here the chart started moving into 520. Okay, so you can see today 70,000 was where the volume had peaked early in the afternoon. In the morning, this area around 514 to 517 was the key area to breach. So let's take a look at tomorrow. You can use this for yourself. You can go and say, oh, okay, I see what's happening. Before
and to be clear, you were looking at the volume there as opposed to the open interest.
Yes, the volume.
Okay.
Yeah. The open interest is just what got done today. The total volume will get aggregated. So tomorrow, before the market opens, it is telling us that the 522s have a ton of call volume there, 52,000 of them at this point. Now, at about 9:45, you want to check it again to see if it's moved. And then
9:45, which time zone?
East, sorry, 9:45 Eastern. Sorry.
Okay.
Yeah, I vote for universal time zone like our clocks have. My husband says that's a horrible idea. Who wants to eat breakfast at 2 a.m.? But
Yeah.
I don't care. I'd get used to it. But in any case, so yeah, that's what you do. 15 minutes after the market is open, you go in there and you check it again, because 0 DTEs will have the most power on the frame, and that's going to be the number that you watch. If it breaches it, you know that traders are going to have to buy to flatten out their delta. The long calls are sitting fat and happy. Same way. Now for the put side, you do the exact same thing. You go, I wonder where the floor is. Now, very interestingly, the floor is almost right on top of the ceiling. This one's at 521 and 520, two of them together. So now it's holding a very tight pocket, and we'll see. Now, my thought is because we're coming into the employment numbers on Friday, and so they're going to sort of flatten in a little bit and then expand as they position later. But that's how you can do it. There's some wonderful things out there that actually mechanize this and make it much more detailed. But if you're just starting to learn, this is a great way to do it.
So now, just so that I'm clear, because again, it seems like, okay, if you're talking about on the call side, you've got a call wall around 521, and the put wall is not that far away. I mean,
Exactly. That's what I mean about compression.
Yeah,
That's
that
what I mean about
compression.
compression.
So how do you kind of use that information, I guess?
Okay, so trend is upside. And so if we lose this wall, right, meaning if trend continues to go up, this wall, people will buy these back, right? The dealer will try to buy it back from somebody else and then sell something further down. So you'll see them move during the course of the day. The same thing will happen here, right? If these guys continue to move up, you're going to see these numbers move down with it. Now, the reason that they're so tight together into the close, let me show you what priced it. Let's go to a 15-minute chart into the end of the day. Right? Now, take a look. That 15-minute chart into the end of the day, look at how price flattened out.
Right.
It just absolutely flattened out. And that will cause the call and the put lines to get very close together. But as the day moves, you'll see it expand. And so our starting point will be that 520. We put a line there, and 522 will be the starting point that we look at. And those things will tell you, you'll see them expand and contract. There's a great Italian company that I use that adds all these pieces together for me so I don't have to stare down in the option chains, and those are the guys that I go to. But this is a good way to open your eyes to what's actually happening in the market.
Yeah. And so this is on the indexes, so the market level. And again, you're using those 0 DTEs, 0 days, so this is every day there's kind of a new 0 DTE, right?
Exactly.
So that's what you're saying with that whole, check 15 minutes into the market. So do you use these call walls for individual stocks as well?
Yes, I absolutely
Okay, even though it's
do.
not a 0 DTE.
Absolutely. So let's look at NVIDIA, because they have so much option behavior. We'll go to the Analyze tab first, and we'll take a look at NVIDIA here. Does the same thing. You go to the weekly option, and you just see where they're piling in. So this one is expiring in 2 days, and we can see, wow, look at that. Somebody's got that 20,000 in open interest at the 90. Wow.
At the 90.
Yeah, that's insane.
Is there a split that happened that I'm not aware of?
Yeah, possibly, but still, I mean, craziness right there.
Yeah. Yeah.
Okay, so right now, the put action seems to be, that's a very big open interest event and volume today. So we've got about 50,000. We'll see tomorrow how big this number is, because this volume is both long and short, and open interest is just how many contracts total. So we'll see. 37,000 of them came today. I don't know whether those are sold or puts. Here's 155. So we're looking at 141 on the floor. And I'm going to guess that it's 150 on the ceiling. And so that's what the traders are thinking. Hey, I'm not going to get up over 150, but I should hold 141. That's what the traders are thinking. And so we can go here and we can say, all right, well, let's see where 141 is. That's a nice breakaway formation. And 150 is still the ceiling for this stock, right? I mean, it just can't seem to get up and over that ledge, right? It's just, it can't stay there, right? It went to 150 and then immediately collapsed. So you can see, all right, this is where they're positioned. So it could move up, it could move down, but if I sell those two, and take a look at how much you can make, really. If you sell the 150s, it's only 20 cents today. If you sell the 141s, it's 26 cents. Tomorrow morning, it might be a fourth of that or half of that. And so, at this juncture, they're not looking at much, but if you're selling 100,000 of them, it does matter.